Okay, so I'm going to our Chapter 6 worksheet. And today we've got two things that I want to talk about. We've already done the second one before, but just rehash it in a little bit more detail and remind you about gain or loss on the sale of long-term assets. But the first thing that we want to do is talk about whether or not we should capitalize or expense things. And so hopefully you remember from earlier discussions, capitalize is recording a cost as an asset because it has long-term use. And so we depreciate that asset over its useful life. Whereas expenses get reported, their costs reported on the income statement. So generally speaking, for capitalization, we record all costs necessary to get the asset put in place, including shipping, installation, and training. We do not capitalize utilities in 99.9% of cases, but especially when those utilities are standard and not specifically attributed to the installation of the machine, of the asset. So now if we look at costs after the asset has been put in service, we still may have to decide whether to capitalize or expense. And typically the rule is only capitalize if the cost is material and changes or extends the useful life of the asset, in which case we add those costs to the historical cost. Most non-material and other maintenance costs, including operating costs, are expensed. So let's hop into an example. And if you have any questions, feel free to ask or click on the chat and I'll be more than happy to try to clarify that. Otherwise, we're taking a look at number 11. So take a minute to read it. And then I will go over it. Okay. All right, I got some questions here. So you guys don't feel like you have to copy all this stuff down. It's great that you're taking notes, but remember, I post all this stuff after class in the course module. Okay, so let's look at number 11. So it's related to the purchase and use of a new building. So this is different than a discussion of adding later, making improvements to an existing structure, remodeling the building. And so, excuse me, here is just what are we doing when we're setting up the building? And so we don't have to worry as much about materiality here. We've decided it's a building and it's going to be pretty material, but there are some small expenses that we might just expense as part of that process and say, okay, there's a minimum materiality threshold. So for building materials, we're going to capitalize that. We're going to capitalize our labor costs. We're going to capitalize the architect's fee and the rent for equipment used in construction. We need that to create or build the building that we're going to be using. Now it says $52,000 in annual utilities costs to operate the building. And it says it was in use on February 8th. Now here, $52,000, if it was just for the period while the building was being put together, you could capitalize it. But this is an annual cost, and so we have to expense that portion of it. And so that's going to be expensed. $90 to fix a broken window, that'll be expensed. Stained rug and annual janitorial costs will be expensed. Okay. So I'm going to throw up the poll there. And if you have any questions, please ask. Make sure you ask in the chat. If you've clicked yes there, if you clicked yes in error, please click no. Okay, going over to the chat window to take a look at that. I'm going to end the polling and share the results while I'm doing that. So we got first question, what is the main reason something would be expensed and not capitalized? Well, the goal here is kind of our matching our revenues and expenses. And so when we're creating something like a building or we're buying something like equipment that's going to service us over several years, we want to make sure that we recognize that expense over several years. Whereas an expense, we want to account for that in the particular period. So if it's going to have long-term use, then we want to capitalize it. And if it's going to be short-term and just related to that period, then we want to go ahead and expense it. Okay. Somebody asked if I put up the classwork grades. I have not yet. It will be, because I had class this morning, so it'll be later on today that I'll put up the approximate classwork grades. All right, and the reason I say approximate is because I'm not pulling the stuff out of Pearson, but know that if you got above a 70, it'll count as a point for classwork towards your percentage in the number completed. All right. All right, so now let's move on to 6-12. And so what I'd like you to do is answer just part one for this. Determine which cost should be capitalized into the machine account. What is the total? So in the chat, to me privately. If you click on the 2, you can click on and send it to me and put your answer for number 12, part 1. And you don't have to make any explanation. All you need to do is just put in the total. Okay. All right, let's go through them. So now this is for the purchase and use. So we're working at this point and we're setting up something and we bought it. So we're going to have the purchase price. That'll be included. Transportation costs, so shipping, that'll be included. Inspection, moving, and handling. So basically that's once we get it into place or into our place, check it out to make sure that it works and then get it into the space. So that is going to be included. And installation and testing. So that's all necessary parts for getting the machine ready to go. And so we're going to include all of those. Now it says power and other operating costs for using the machine during the year. And so in this case, this is not included. So this one would be expensed. All right, the other one's in bold, and so we end up with a total of $185,800. Part 2, let me just see, there's a thing in chat here. Somebody may have put their answer. I just want to check it. Okay. All right. It says determine the total operating expenses associated with the machine during the year ended December 31st, 2011. Assume the machine has an estimated 5-year useful life and an $8,000 salvage value. And so in this case, we want the operating expenses. And they've also given us information regarding the machine's useful life. So they would like us, although it's not exactly clear from the wording in the question, to calculate some sort of depreciation. So I'm going to start with, and I'm going to assume straight line depreciation. And then I'm going to stop yelling at you. And so we have 188,000, or excuse me, 185,800 minus the $8,000 salvage value. And it has a 5-year useful life. And so quick calculator, 185,800 minus 8,000 divided by 5 gives us 35,560 in depreciation expense per year, plus the 43,000. And so we're going to have approximately, or 78,560 in operating expenses. All right, I got a question in the chat. I just hadn't gotten there yet. So I answered that question, hopefully. All right. Is there any questions on number 12? Type them in the chat. If not, I'm going to move on. Okay. So now we're moving on to kind of the second part, gain or loss for sales transaction. And keep in mind, a lot of these things are going to say in cash, and sometimes they're not going to say in cash, but they're going to say proceeds or sold for. And we're going to have to assume cash unless it says something else. So when we get into some of the questions about cash flows, which you have in your homework, you'll want to pay attention to our next question more heavily so than this one, but we want to go ahead and just sort of remind us, how do we calculate whether or not we have a gain or loss? So remember, gain or loss on the sale of long-term assets is calculated by your cash or proceeds less the book value. And remember, book value equals the historical cost plus if we made any improvements that we added to it. Minus accumulated depreciation. Now, remember, or you'll want to make sure it is caught up. Now, usually in the entry-level classes, they say, okay, depreciation was this, and you don't have to worry about doing a half year. As you kind of move on in accounting courses, you may have to make a calculation to get the depreciation up to date. So pay attention to the dates. Hopefully, not hopefully, but if you have that, you may have to calculate the depreciation for a half year or something like that. And remember, we use a formula similar to the principal times interest. We just calculate it out for the needed months and add that to the accumulated depreciation. In this case, though, it says that the company sold it for $8,500 in cash. So we have proceeds of $8,500. And our book value is $30,000 historical cost minus $20,000 accumulated depreciation. And so we have a $10,000 book value. So 8,500 minus 10,000 book value equals minus 1,500, and that is a loss. And so C, we have loss. All right, moving on to this next question. And this was kind of confusing to some of the students, but they were trying to push both parts together. So this is a two-part question. And what I'd like you to do, if you can, is determine the net amount of cash generated by all of the transactions. So again, go through A through E, or excuse me, A through F, and determine the net amount of cash generated. And then type that in the chat to me privately. No, you're not doing part 2 yet. We're only doing part 1, determine the net amount of cash. Oh. First answer came through, and it's correct. Good job. Hopefully some others will start coming in here. Got 3 so far, but I got about 20 participants on here, so I'm expecting to see another 15, 16 more. Give you another minute. Okay. All right, so let's go through each one. So this says purchase land at a cost of $134,000 in cash. So not a loan, not for stock, not a trade, so that one's going to count. This one says invested in stock as a long-term position for $289,000 cash. And says sold an old warehouse for $77,000. So I'm going to assume in this case that this is cash. Part D says sold an old piece of equipment for 20,000 cash scrap. And then sold for 13,000. I'm going to assume that one's also cash. And then the last one says sold land for 220,000 cash. So we've got an outflow of 134,000 for A, and B, an outflow for 289,000 in cash. In part C, this is going to be an inflow of 77,000. Part D, an inflow of 20,000. Part E, an inflow of 13,000. And part F, an inflow of 220,000. So that gives us a total of an outflow of 93,000. Okay. Now determine the net gain or loss from the transaction. What is the total net gain or loss from all of the transactions combined? Okay, so we want net gain or loss, but we also want to know net gain or loss from each transaction. Okay, so let's start with A. We only purchased it, so we don't have an associated sale related to this, so there's no gain or loss. Same thing with the stock. We purchased it, but we didn't sell it, so we have no gain or loss there. Part C now, we received 77,000 proceeds minus the book value, 350,000 minus 200,000. And so that is going to be a $73,000 loss. Part D, we had proceeds of 20,000 less the book value, 560,000 minus 430,000 gives us a loss of 110,000. E, we had 13,000 in proceeds and our book value was 30,000 less 15,000 of accumulated depreciation. And so that's a $2,000 loss. F is land. We had 220,000 in proceeds minus our 170. Remember, land doesn't have accumulated depreciation, so that's a $50,000 gain. And so that gives us a total net loss of 135,000. All right, so 183, 185 minus a 50 would be 135. All right, I'm going to throw up the poll again. If you have a question, please ask. If not, click on no. If you do have a question, you can come on voice and ask, or you can type it in the chat. Okay, I'm going to go ahead and end the polling. I'll share the results. Nobody had any questions, so I'm going to move on to the next part. Okay. So says the company purchased computers on January 1 at a cost of $120,000. The estimated useful life is 4 years and there's no estimated salvage value. So if we want to complete the depreciation schedule using straight line, it's fairly straightforward. Straight line depreciation per year equals 120 minus 0 salvage value divided by 4, and so that equals 30,000. So our depreciation expense 30,000, our accumulated depreciation is 60,000, and our book value at the end of the year 120,000 minus the 30,000 equals, and I'm gonna need more space here. $90,000. Oh, sorry, typo, 30,000. Thank you for that, Madison. I appreciate you following up with me there. So each year this would be 30,000. And this would go up by 30,000, so 60,000, 90,000, 120. And each year this would go down by 30,000. And we'd have 0 after 4 years. Now we want double declining balance, and that's 2 times, or dear fingers, do what I ask. Okay, 2 times the straight line percentage. And so to calculate the straight line percentage, we take 100% and we divide it by its useful life, in this case 4 years, and so that's 25%. So we multiply 2 times 25%, and that equals 50%. So for each year, we're going to be taking 50%. Now notice there's no percentile on the last one, and that's because we're going to take the remainder. And the reason that is because if you had a salvage value or something like that, you might not have the full value, the full 50%, and we also want to take it down and eliminate any book value in this case, because the asset has a 0 salvage value. So it says book value before depreciating the asset, that's 120,000. Depreciation expense 50% times, so we've got 50% times the 120,000, and that equals 60,000. And so accumulated depreciation at the end of the year is 60,000. Now we have 120,000 minus the 60,000 for our book value. Oh. And so our book value is going to be 60,000 beginning of year 1, or year 2, excuse me. And so we multiply the 50% times the 60,000, we get 30,000. And so accumulated depreciation is 90,000. Okay, now our book value is 30,000. And so our depreciation expense is 15,000. And so our accumulated depreciation is 105,000. Now our book value is 15,000. So our depreciation expense, because we want it to be 0 at the end of the year for accumulated depreciation, is 120,000. So this asks, which method would report the greater net income in 2011? And so what you're looking for is you're looking for the smaller depreciation amount. So we have depreciation expense of 30,000 using straight line, and depreciation expense of 60,000 using double declining balance. So the answer to that question would be straight line. All right. And then it says which method would result in the higher amount of total depreciation expense over the 4-year life of it. And the answer is neither. Both result in the same amount of depreciation. Okay. So I'm going to throw up there the poll again. Ask for your feedback if you have any questions. You guys have been a little more quiet than my morning class, and so we're way ahead of schedule, which is why I don't have any more questions on here. I have one person that says they have a question, so if you could type that in the chat, I'll be more than happy to answer that. I'm going to open another file right now. Yeah, I'll go back to the 2014 in 1 second. Okay. Scrolling back up, someone had a question, so I'm going to end the polling and I'll share those results with you. Then give me 1 second to take a look at that. Had 2 questions and only 1 person has sent me one. So if you have another question, please type it in the chat. All right. So their question says, can I explain the 2014 row one more time? So I think that we're talking about for double declining balance. And so that's this row here. And note that each period for the double declining balance, we're going to be taking 50%. So that's double our straight line rate. But we wouldn't want to take 50% in the 4th year, because essentially by doing this, we would end up with an infinite life in the asset. So in that last year, we are supposed to take the remainder of what's left for depreciation. And so in this case, we're depreciating the asset down to 0 because it has a 0 value, salvage value. And so we have to get to 120,000 in depreciation. So our book value is 15,000. And so our depreciation expense is going to be 15,000. And so overall, we're ending up with accumulated depreciation of 120,000 and book value of 0. And then somebody else asked how they know both result in the same accumulated depreciation or same amount of depreciation. So in straight line, you have 30, 60, 90, 120. And then in double declining balance, the accumulated depreciation 120,000. So that's how you know both of them have the same amount of depreciation. Okay. Any questions there, or did I clear that up, hopefully? Okay. I'm pulling up one more question. I didn't have time in the other class, but we're going to have enough time here. Okay. So hopefully you can see 6-17 says they purchased a truck for $80,000 that has an estimated useful life of 10 years or 200,000 miles and a salvage value of 20,000. Then some additional information. The truck was driven 24,000 miles in 2011 and 30,000 miles in 2012. So I want to make sure that we know how these get posted into the transactions, or in the transactions into the accounting records. So let's take a look at the first part. So we want straight line depreciation for the first one. So we have 80,000 minus 20,000 salvage value divided by the useful life, which is 10 years. So our depreciation is going to be 60,000 divided by 10, or 6,000 per year. And so under straight line, how we would record it is, it'll take a minute because this is an embedded Excel file. 6,000 under accumulated depreciation and 6,000 in depreciation expense. Okay. Scroll down. Now this one's asking for using the activity method. And so the activity method says, okay, we're going to take our historical cost, we're going to subtract out the salvage value. So that equals the 60,000, and we're going to divide that by 200,000 miles. And so our depreciation is going to be 0.30 per mile. And in that first year, 24,000 times 0.3 equals $7,200. So how we record depreciation here, 7,200 accumulated depreciation. And 7,200 of depreciation expense. Now, the next part, C, is asking for double declining balance. So we're going to go 2 times the straight line percentage. So 100% divided by 10 equals 10%. We're going to multiply that by 2 and get 20% depreciation. We take the 80,000, because we don't take into account salvage value. We multiply that by 0.2, or 20%, and we end up with 16,000. So that gets recorded I have to scroll down a little bit. Hopefully you can still see everything. As 16,000 accumulated depreciation. Oh goodness. 16,000 accumulated depreciation. And 16,000 in depreciation expense. Okay. So I had a question come across and somebody said, well, why did I multiply 20% by the 80,000? This is our historical cost, the 80,000, and 20% gives us our depreciation. So if we were backing up just to our previous question, it's similar to this. So here we'd have 20%, 80,000, and so it would be 16,000. So similar to double declining balance there. All right. So the question says next, show the amounts that would appear in the financial statements for the second year for each method. Put an asterisk by the method that best represents the actual use of the truck. So it's pretty straightforward. Just give me 1 second here for this to pop up. It's an embedded Excel file, which is nice here for the math. I'll show you in a second. The activity method is, of course, the one that most represents the actual use of the machine. For straight line depreciation, we had 6,000. In our second year, we had 6,000 plus 6,000. And so the truck book value net would be 68,000, I'm sorry. 80,000 minus the 12,000. Now for the activity method, we have 0.3 and we're multiplying that by 30,000 miles for year 2012. And so that's an expense of 9,000. Our accumulated depreciation would be the 7,200 plus the 9,000 above, and that's 16,200. And then the net value of the truck, take the 80,000 and subtract the 16,200, and so we get 63,800. Double declining balance. So now we have to take our book value. So we had 80,000 minus the 16,000 that we had depreciation in the first year. And then we're going to multiply that by 0.2 or 20%. And so that gives us 12,800. Our accumulated depreciation equals the 16,000 plus the 12,800. So we get 28,800. We take the 80,000, subtract out the 28,800, and we get a book value of 51,200. Okay. So now we got 1 minute left in class. I'm going to throw up the last poll. If you don't have any questions, click on no. If you do, click yes and type your question in the chat. Our homework this weekend that's going to be due is focused on calculating the depreciation and focused on cash. Now remember, depreciation itself is never cash, so don't count that as part of the cash. Okay. All right. 16 of the 19 people voted, so I'm going to end the poll. I'm going to share the results, and then I'll look at the 2 questions in chat. You'll have to check the classwork due date. And somebody asked about classwork grading. Basically, as long as you do all the questions and you get over a 70, you get the credit for the classwork. So classwork itself is not graded in Pearson beyond, I'm not giving you 70%. You get credit just like you would in the handout. When you handed in before, I gave you credit if you attempted all the problems. And so roughly you get 70%. I assume you attempted all of the problems and you get credit for that. And I'll post what I have for your classwork probably within the next hour. The reading quizzes are extra credit and they count as points towards an exam. So they're going to go into your exam points. Exams 1, 2, or 3 as extra credit on the exams. And that's as long as you got 7, 8, or 9 on the questions there. Any other questions? All right, I'm going to go ahead and stop the recording.